First thing on the record is me burping. That's pressure. All right. All right. So good afternoon. All right. So we have Kaylee online. We have Xavier in person. All right. Okay. So, lady and gent, we have been working with expense accounts for the past 3 weeks. Right. Normally I don't spend so long, but past couple of weeks I was a little tired during the class, so I guess maybe I was taking a bit longer or trying to over-explain. I don't know. All right. Now we've looked at a few things. Right. We started like literally from scratch and talked about what expenses are, preparing expense accounts. Right. I'm not going to go through all 10 pages. Right. Now we've gotten to a point where we can start with an opening balance. We can be given the amount paid and the amount incurred, and we need to know the balance at end. If it's accrued, if it's prepaid, if it started off, like in this case, it started off accrued and ended up prepaid, and the one down here, it started off prepaid, ended up accrued. And we've seen other things. We've seen it like start off prepaid and end prepaid. We've seen it start off, start off, oh yeah, that was the same one, okay. And this one was, start off accrued and end up accrued. We've even seen start off accrued and end up neither prepaid nor accrued. So there's no, what am I trying to say here? So don't think that it'll always go the same way every time. It could start off with a balance and end up with a balance. You could start without a balance and end up with one, or any combination, right? And the balance that they start with might be what you end up with, or as we saw on this page, it might not. It might switch, right? So what I want to do today is I want to kind of give you, hold on, let me see if I could get I'll pull this one across, right? Page 11, right? So let me just zoom in a little bit more, right around here. Right, so what I'm going to do, actually that's 300, no, 300 is a bit much, so 250 should be fine. Right, so what I'm going to do is, right, let's look at 25, 25, right. Now, I'm not a big fan of date columns, but I know that's a bad thing because I often kind of give people the impression that date columns are not important, and that's very far from the truth, right? So what I want to put on this page is like a kind of bit of a format to kind of capture all of the stuff we have so far, all right? So recap of format thus far. All right, so let's put that in another color, give it a different thing there, make it bold, right? Okay, so let's put that, right, so expense account format. Right, now, I know a lot of teachers and a lot of people try to reduce PoA and accounting to a bunch of formats you have to learn off, right? Formats are a byproduct of the way we express things. Now, with T accounts, there's not much variation how they're presented, right? Sorry, I don't know what happened there. Right, yeah. With T accounts, right, I mean, there's really usually one way you present a T account. But then what happens is sometimes, like I said, I'm missing the date column. Sometimes on the exam, you'll see all these different, like all the borders filled in. So you know exactly where to write. And some people like, and some people need that, because if you give them like carte blanche like this, hold on. Yeah, like that, then they kind of write all over the place and all kind of madness. So you don't want to, you want to give people freedom, but at the same time, you also have to give them limits, right? Because if you have too much freedom, sometimes people don't know how to handle that, right? But before we get into a whole different existential talk, difference, right? So we know an expense in the cost of doing business, right? Now, why do we start a business? Because we want to make a profit, right? Cool. Now, there are many other reasons, but we're going to focus on that one for now, and we're going to keep things kind of simple in that respect. We want to make a profit. Now, if you think the regular CSEC maths and the consumer arithmetic is also a relatively simple formula for profit, which is selling price minus cost price, right? Now, when you scale up that particular formula, selling price minus cost price, we get revenue earned minus expenditure incurred. And what we are kind of focusing on here is how to account for that expenditure with these expense accounts. Now, you can also refer to them as expenditure accounts. We also talked about the two types. Sorry, can you do a video about the general ledger? Well, technically that's what I'm doing. The general ledger just houses T accounts. There's nothing you really have to know about it other than that, right? It houses T accounts for assets, liabilities, capital, expenses, revenues, but not individual accounts for debtors, which is receivables, nor individual accounts for creditors or accounts payable. All right, that's pretty girl on TikTok there. Right, so yeah, so it's don't let them confuse you or make you think it's more complicated, right? But what you're seeing here today is how to prepare a T account for expenses, and that's kind of what you have to put. Well, one of the things you put in the general ledger. Right, next week we'll be doing revenue accounts. Okay, right, sorry. So yeah, so we have to know how to account for expenses. What do I mean by account for? The word account means to explain. We want to be able to explain what happened with the expense. How much were we supposed to pay? What was the bill, right? That, the kind of technical word we use there is how much was incurred. So for example, if you sign a rent agreement or a lease agreement and you agree to occupy a space and pay a rent of, let's say, $5,000 per month, every month you're incurring $5,000 worth of rent, right? Now, depending on the, the details of the contract, right? The rent may be due at the start of the month, it may be due at the end of the month, it may be due by a particular date in the month, so you might have some leeway, right? But when you consider it as a whole, how many months in a year? 12. And if you're paying $5,000 per month for the whole year, the total rent expense would be $60,000. 12 months by $5,000 per month, right? So at the end of the year, you would have incurred a total of $60,000. Of course, we have to account for these things on an ongoing basis, right? So what the assumption we usually make is that the expenses incurred evenly throughout the month, right? But we could put in figures as needed, right? Now, like I said, so this format here is a kind of template, right? I guess let me put in all the borders now. Right? I kind of prefer a scale down version with less lines, but sometimes you need lines, right? Okay. So actually, you know what? No, I'm just gonna put that back. All right. So there are two things. There's one thing that should always go in an expense account, right? When you're accounting for an expense, usually you always need to put the amount incurred, right? The amount incurred is the amount that we were supposed to pay for that item, right? And we said an expense is an amount of money paid to either acquire some benefit, like electricity, the rental we pay for the room, your employees' services via their wages, insurance, utilities, internet, Wi-Fi, supplies, etc., right? So you either use it to acquire some temporary benefit or to avoid some unwanted negative situation. Like if you don't pay electricity, you have no current and you can't operate. If you don't pay for your Wi-Fi, you have no access to internet, right? So we either pay to acquire the benefit or to avoid losing the benefit, or we pay to acquire an asset on a long-term basis, right? So when you buy non-current assets, but that kind of expenditure, when you buy a motor vehicle or equipment or furniture, that's capital expenditure. The expenditure we are talking about here is actually classified as revenue expenditure, which sounds kind of contradictory because, I mean, revenue and expenditure are opposite items in the profit calculation, but it literally is the money you have to spend to be able to make money. That's why we call it revenue expenditure, right? If you don't pay your rent, you can't occupy your space and conduct your business. If you pay your rent, but you don't pay electricity and you cut it off, how are you supposed to do anything, right? So the amount incurred in respect of an expense always goes on the credit side of the expense account, right? So you could put the incurred amount, right? But traditionally we put income statement, right? Now why do we put income statement? Because at the end of a financial period or a reporting period, all expenses and revenues have to be transferred, all expenses incurred and revenues earned have to be transferred to the income statement for the purpose of calculating profit for the period, all right? And this is how we transfer any expense, right? We credit the expense account. Now you might be saying, well, look, you credited income statement. No. This is not a credit to income statement. This credit is in the expense account. And it says income statement in the details column, right? This is not a credit to the income statement. This is a credit that says income statement, which is not the same thing, right? Because it exists in whatever expense account this is, right? So the income statement is the amount incurred, all right? That always goes on the credit side of the expense account. Because when you transfer it to the income statement, it'll be debited there, all right? Now, the other item that is usually found in an expense account is an amount paid. Now, it's quite possible that we don't pay any amount for the expense, in which case we'll end up owing the whole amount, right? Or maybe we prepaid it beforehand and we don't have a cash flow. But normally, the amount paid will go on the debit side, right? So you can call it the cash book figure, right, or the amount paid. All right. I'll leave that one for now, right? Okay, so income statement. Right, so amount incurred. Right. Okay. That goes here too. Right. Lovely. So these are the two major items. This one being the primary one. This one being usually primary, maybe secondary, but optional, right? But usually you'll have one. Now, opening and closing balances need not exist, but they often do. So we need to know on what side we put those things. Hey, Gabe. Gabe invites me to co-host. Oh, sorry. This is one of my friend's sons. One of my wife's. Well, actually, I know you guys from before. Yeah, Gabe. I'm doing a class, so I can't do that right now. Sorry. Yeah, right. So like I was saying, opening and closing balances need not exist. However, they often do. So we have to know where to put them and what to do with them. All right. Now, let's start with an accrued amount. As we know from before, an accrued amount for an expense is an amount that has not been paid when it should have been. For example, if the rent figure was $5,000 and we only paid $4,500, we're missing $500. So the $500 that was missing from the payment is the accrued amount. It's also referred to as an amount outstanding, an amount in arrears, an amount not yet paid, right? But normally we call it as the accrued expense. All right, so an accrued expense is classified as a current liability because it's an amount owed. And anytime we owe anybody anything, that's classified as a liability. Liabilities have credit balances at start, right? So if you have an accrued balance at start or brought down, it will go on the credit side. And similarly, if you have an accrued balance at end, it will be first carried down, right? It will be first carried down from the debit side and then brought down on the credit side. Right? I had a student who, she couldn't say accrued. She always said accrued. I'm like, that's not the word, but okay. All right. Now, an amount accrued is an amount left outstanding or unpaid at the end of a period. And like we said, it's classified as a current liability. Right? So, liability in the balance sheet. All right, so it's classified as a current liability in the balance sheet. Now, the opposite of having an accrued amount where we don't pay enough is where we end up paying too much, or we overpay, or we prepay. So we can have a prepaid balance for an expense. So for example, same thing, if the rent was $5,000 and for some reason we wrote $6,000 in error on the check, or we paid $6,000 for whatever reason, we would have paid more than was incurred, right? If you pay more than was incurred or more than you were supposed to, you overpay. But we refer to it as a prepaid amount or prepayment, right? So prepaid balance at start, right? Now, you could always put BD for brought down or BF for brought forward, right? So it's classified as a current asset because if you pay for something before you receive it, you now have a reasonable expectation to receive whatever the benefit is in the foreseeable future. And that is actually part of your definition as an asset. An asset is not just something you own and you control and you use in your business. It's also any benefit you can reasonably expect to receive in the foreseeable future. For example, a simple transaction is a credit sale. When you make a credit sale, right, you will debit accounts receivable to establish your receivable, the asset, because we classify it as an asset, and you will credit sales. You will credit sales because you would have earned your revenue by providing that good or that service to the debtor, the customer, and then you will also, you'll also record the asset of the receivable coming into existence, right? Because it's not, you didn't receive anything cash-wise. You received a promise to be paid in the future. That is the asset, that expectation, right? So the prepaid balance for an expense is an asset, all right? And at end, sorry, one second. Prepaid balance at end. Right, and you can of course bring it down. All right, so this is a current asset in the balance sheet. Okay, right. So this is now you're not gonna in the actual accounts, you're not gonna write these things that I've highlighted in blue and yellow, right? That's just notes for you all for now. Okay. So what we want to do is we want to be able to kind of use the formats. Like I said, I don't like to reduce accounting topics to just formats. I think that's a mistake. Formats have their place because there are things we end up using repeatedly. So we end up kind of memorizing them through practice, right? But don't make it your life's work to memorize formats and think that you then understand accounts, right? It's like memorizing, like if you're going for your driving test and you memorize the manual for the car, but you never drive the car before, right? You had to drive the car to know how it's work, right? So same thing here. You have to use the accounts to kind of know how they work, and the knowledge and, like I said, remembering the format becomes a byproduct of your practice, okay? But at the heart of any kind of format in accounting is the presentation of information. And once you understand what you're trying to present and the maths behind it, because accounts is based on maths, right? So anyhow, before I make my usual mistake of over talking, right? What I want to do is I want to actually send this in the chat. So what I think I will do is I will put in all the lines. I will then take out the grid lines to see if that would help. So give me 1 sec. Let me send it in the chart. Wait, where did it go? Oh, there you guys are. Right, cool. Okay, right, lovely. Okay, cool. So that's the format. All right, Xavi, any questions so far? We're looking decent. Yeah? All right. Haley, what about you? I'm sorry, Kaylee, any questions, problems, or issues, or so far so good? All right, cool, lovely. Right, so, lovely. Okay, cool. So what we want to be able to do now is to kind of use this format to help us answer questions that that can be brought for us. So what I am going to do is I'm actually going to go straight to the participle questions, right? So I would have sent this in the chat so Haley could pull it up, but I'll also have it on the screen as we do the question. Okay, sorry, I don't know. Yeah, as we do the questions, right? But I'll print them out here for Xavi. Xavi here, right? Current page, right? So just give me a sec. All right, so what I'll do is I'll go through this first one as an example. Then we will do others as well as we go along. All right, so yeah, we'll repurpose this item now because this says the revenue account. Let me zoom in so we could take a look and see what's going on, right? Cool. So just give me one. So this is the, yeah, so I took a, remember, I think last week I took a look in my list of participle questions and I saw that there weren't very many or any other expense accounts past this, which was Jan 2018. So that's a whole 7 years ago, which kind of begs the question, well, if it's on the syllabus, why they're bringing it? Because again, the syllabus is too big to effectively test in just 5 questions. Even if it's a 5-part A and 5-part B, you could maybe test 10, you could put 10 questions, the 11 sections on the syllabus, 2 of which are just pure theory. So they're kind of waste of time to a certain extent. I'm not trying to bad talk them, but anyhow, that's a whole different conversation. Right. So yeah, and even if you were to bring 10 questions, you can't test very deeply. You could test very, shallowly, or that's a word. Anyhow, right. So what I want to do is I want to just copy this page as a matter of fact across here. And this is the Jan 2018 question. Oh, that's not from. Oh, Jan 2018. Why did it do that? Okay, hold on. I know what to do. Jan 2018, paper 2. What's the question again? Question what? Question something, right? Okay. I'm going to need to put this one back on the top and then put this one below. All right. And of course, this one is a little too big, so we're going to have to zoom out here. All right. Right. So let me actually maximize this. So Zavi, you have your copy there, right? Okay. So it says here, let me zoom in some more actually. The following is a summary of Sweet Serve's bank account for the year ended 31 December 2017. So we have a bank account. Now at this stage, you should know what a bank account looks like. You should know what goes on what side. So just a quick recap of that as well. 1982, 1409, Stephen. Stephen is still there. Is that your birthday? That's actually my wife's birthday too. Anyhow, yeah. So a bank account, how do we classify bank? Bank is an asset. What are your double entry rules for assets? Debit to increase, credit to decrease, right? So on the debit side of the account, we're seeing the opening balance. That's how much money we have in the bank account at start. We're seeing two inflows. One is sales and one is rent received. Okay, no problem. The credit side shows decreases to our bank account or payments or money taken out of the bank account. So we have purchases, insurance, sundry expenses, not sundry, and then drawings. So drawings is anytime the owner takes out money for his or her own personal use. All right. Sorry. And then it also says the following information is also available. So we're going to ignore the rent revenue for now. And what we're going to focus on is the insurance expense owing, right? So I want to put a red box around that. So we can just kind of focus on that for now, right? So we're going to put that at the top there, right? So the following information is also available. What I want to do is split the screen. Right, okay, cool. And I'm actually gonna highlight, oops, nope, okay, that's not what I wanted to do at all. Right, sorry, one second, this piece here. Okay, cool. All right, so on the top of the screen, we have that the following information is available. So we have, it says here 31/12/2016, so that's 31st of December 2016, and here it says what, 31/12/2017. So 31st of December 2016 is the end of one year, and 31st of December 2017 is the end of the following year. Aidan Trini saying, hey Aidan, how you doing? Evening. Watch my power of free will. Oh, okay, cool. Yeah, so like I was saying, we have basically what they've given us here is the balance of insurance expense owing at the end of 2016 and the balance of insurance expense owing at the end of 2017, right? Now, what they want us to do is they want us to prepare the insurance expense account. Okay, so first things first, we're going to head up here, insurance expense account. Let's take out the word format. All right, okay, cool. Now, what do we need in order to be able to do this insurance expense account? Well, we'll need all of the information pertaining to the insurance expense. All right, so on the top of the screen here, we have the closing balance for 2016. Now, the closing balance for 2016 becomes the opening balance for 2017, right? So the opening balance for 2017 is the 1,500, and the closing balance is 700. Now, it says insurance expense owing. So if you consider it, when we have an amount owing, is that an accrued amount or a prepaid amount? An accrued amount, right? So we have that. Now it says insurance expense owing. So this is the accrued insurance expense at the start and at the end. So what we could do here is we could take out anything not, well, that's not an accrued item, right? Okay, cool. So the accrued balance at start would be how much? That's 1,500. And the accrued balance at end is 700. Right? So what I'm kind of showing you how to do here is kind of how to use the format, right? You're just going to plug in the items on the correct side as you go along. Right. And then the only other item here is this insurance. Now this insurance figure down here is in the bank account. It's on the credit side of the bank account. The credit side of the bank account records payments in respect of those items. So this 45,000 is how much we've paid in respect of insurance in 2017. Now, if it's on the credit side of the bank account, on what side of the insurance account would it be? If you think about your double entry, every credit needs a corresponding what? Debit. So if this item here 1 second. Yeah, if this item here is on the credit side of bank and it says insurance, right, which is the name of the other account affected or the item that we are paying, in the insurance account now, it'll be on the opposite side. So if the item is on the credit side in the bank account, it'll be on the debit side in the other account, right? So, and again, that's why it says cash book here, right? So the cash book amount paid was how much? 45,000, right? So what we're trying to figure, what's missing here? What's missing is the income statement figure, all right? All right, so this 700 is actually brought down here as well. Let's take this out. Cool. Okay, so we're trying to find the income statement figure, or the amount incurred in respect of insurance expense. And all we have to do therefore is balance off the account. What does that mean? If we were to add up the items on the debit side, right, we would get 45,700, yeah? Now this total must also apply across here, but if we add up this side, what we get? 1,500. That, are these two totals equal? No. So to make them equal, we have to add something on this side that will make it equal to 45,700. To do that, we simply find the difference between this total and the current total on this side, which is 1,500, right? So now the income statement figure is 44,200. Actually, no, can't use that color. My bad. Right, and that's how we find the income statement figure in respect of an expense. So in this case, specifically, insurance expense. All right, so that's really all there is to it for this T account, by the way. There's nothing else to do. Right, the only thing that I would say that's kind of missing is the date column, because they did give you some dates, and if they give you dates, you should really use them. All right. Oops, sorry. Yeah. So again, let's just take a brief recap of what I did. All right. So when we read through the question, right, so it says the following is a summary of Sweet Sales Bank account for the year ended 31st December 2017, right? So the bank account shows us the opening balance and only money coming in. It also shows us only money going out and how much money we have left carried down to the following year, right? Now, they give us some other information, right? Right, we're focusing on the insurance expense. So at the end of 2016, which coincides with the start of 2017, we are owing 1,500. At the end of 2017, we're only owing 700, right? But what it means is we have an opening and a closing balance for insurance, both of which are accrued balances. We okay with that? Okay. Now, so what they want us to do, and in addition to that, we also have a payment for insurance in the amount of $45,000, right? Being like either a one-time payment or a cumulative amount for the total amount paid in respect of insurance. Hey, ZZZ, what's going on? Yeah. So what we have to do, so what's missing is the income statement figure. So what we have to do, basically, right, is use the information given to us to calculate the income statement figure. Now, how do we do that? So we open up an insurance expense account, right, like this. All right, let me actually take out everything. Actually, hold on. This could come out. Actually, I'll just take out everything, yes? Yeah. Right, so again, what we do is we have to use well, when I say easy format, you're not going to be allowed to carry the formats in, nor the formats as in like where the items were given to you. They might give you actual like grid lines like these to fill in, so you have to know what goes where. Right, so if we're doing the insurance expense account, we have two balances. We have this balance here, which is at the end of 2016, which also once again coincides with the start of 2017, and we have the closing balance for 2017, both of which are owing or accrued. Accrued expenses are current liabilities. So at the start of any particular period, if you have an opening accrued balance, for an expense, it will be brought down on the credit side, because the credit balance implies a liability or a revenue, but we know for sure insurance can't be a revenue, and it's an accrued amount, so it's a current liability. So accrued, So you can put balance brought forward or balance at start, right? And that's how much? 1500, right? Now we could even go straight and put in the balance at end, right? So the accrued balance at end is 700. Now we know it's going to be brought down on the credit side because it's a liability. Accrued expenses are liabilities. But before it can be brought down here, you have to account for it in the previous period. So by carrying it down, right? So if it's going to be brought down on the credit side, it has to initially be carried on from the debit side. Make sense? All right. Accrued balance at end. Right. That's how much? 700. Okay. And then the last figure that we have in respect of insurance in the whole question is this figure here. Now this $45,000 is in the bank account on the credit side. Entries on the credit side of the bank account imply that we are paying those items. So this shows, this entry here highlighted in gray shows that we are paying insurance of $45,000 out of the bank account. So if it's on the credit side of the bank account, right, it means that it has to be on the debit side of the insurance account. So we're going to put that here, right? So 45,000, and that's bank. You can put bank, you can put expense paid. Yeah, exactly what's happening. I'm starting to fall asleep already. So I know, I think it's a Tuesday thing. Because it didn't happen any of the other days, did it? No. Was I sleepy Tuesday? I don't feel like I was. No. I guess it's a Tuesday thing. I don't know. Anyhow, right. So what we have here is we have 3 items in the insurance expense account given to us from the question. So again, you have to know how to read through the question, pull out the information, but you have to know what information goes in the expense account initially, right? You have to know that you could have an opening balance, you could have a closing balance, so you have to know what side those go on, and of course it'll depend on if it's accrued or prepaid. You also have to know that either you'll be given the income statement figure or you'll have to find it. And the cash book figure is usually given. It's very, very rare you have to find the cash book figure, but it's not impossible, right? So with expense items and revenues, you're either going to be looking for the you're either going to be looking for the income statement figure or the closing balance. So if they give you an income statement, you're likely have to find the closing balance. If they give you the closing balance, you're likely have to find the income statement figure, right? On occasion, they might ask you to find the cash book figure. And very, very rarely do you have to work backwards to find the opening balance. I've seen it once, right? Okay, so how do we find the income statement figure, right? So, statement, right? Right, so if we add up this side, you get 45,700. Well, that should be the same total on this side, but as you can see, it's only 1,500. So to get the amount in respect of income of the insurance incurred, the income statement figure, we simply have to find the difference between the total here and the figure here, right? And then you put your accrued balance brought down to the next period. Okay, all right. Okay, so let me actually send a picture of this in the chat. So what I'm going to do is I'm actually going to go back up here. Right, so I'm going to send this picture in the chat. Sorry, I'm trying to crop the edges real quick. Right, and I'll send the solution. Okay, all right. Keely, are you okay with this particular solution for the Jan 2018 question?
Yeah.
All right, good. All right, Zavi, you feel you okay with that too? Okay, right. Now, as we go through, we're going to go into our next question, right? You copied it down? You had it down? All right, cool. Right, now the next question is Jan 2016, right? So it didn't appear in May 2017 or Jan 2017, right? Now, in this particular one, it says that the Gargamel company maintains separate ledger accounts for rent, expense, and commission revenue. Now, again, don't worry about the revenue stuff. As you could see, they like to bring them together to make sure people can do both of them because you need to be able to, all right? But we're focusing specifically on the rent expense account, right? Okay.
Sorry, I just had a quick question with the graphs. I couldn't remember if it was a math thing or a science thing with them.
What is that?
With them, are we supposed to, like, when we draw the graphs, do we have to have like the name of the graph and all caps on top, line underneath, and then
if it is you're doing a graph or something, like let's say it was the distance traveled or something, or like it was a stats graph, I would say if it's basic coordinate geometry graph,
and
the label is supposed to tell us what we're looking at, what that is telling us about, what it represents.
okay, and then with the plots and the points, is it the dot with the circle around it, or does it really matter?
You can use a dot with a circle around it for increased visibility at start, but what you're building to is just a small dot.
Dots. Okay,
Yeah.
so it doesn't matter. Okay, and then the last thing is the scale. So you write down the scale for the x and y.
It's good practice to do so, because physics primarily, you will need to do that. If he's not doing physics, I mean he's in Form 3, right?
Yeah.
Right. So he's probably doing physics. So it might be a good practice to write that down
scale.
because
Okay.
it's important that they do that so that if the question gives them
you a scale.
that they know how to do it.
Okay.
All right. Okay.
Thanks, Chris.
No problem. Yeah.
Oh, right. Last one. Do the graphs have to be bigger than half the page?
I wouldn't hop on that right now because some of the graphs that we're gonna do. I mean, we're doing like basic generic graphs, so you
Yeah.
could take up a whole page, right? But I don't see that there's an absolute need to. I would even say you can maybe be able to put a second graph on the same page just to save some paper.
Okay. Yeah.
But don't go more than 2 graphs a page, because then it just gets cluttered.
Yeah. Okay. Thank you so much.
All right, no
Chris.
problems. Right, sorry guys. Right. So the Gargamel company maintains separate ledger accounts for rent, expense, and commission. Right. During the year ended the 31st of December 2015, Gargamel company recorded the following information. Right. So 1st January 2015. So if it's first, so it says the year ended December 31st, right? So if the year ends on December 31st, what is the 1st of Jan relative to that? That is the start of the year, right? So if the end of the year is the 31st of December, which coincides with our calendar year, it means that the 1st of January 2015 was the start of the year. And what we're seeing here existing at the start of the year, we're seeing prepaid rent, right? Now, prepaid rent is classified as an asset, a current asset. What type of balance does an asset have at start? Debit or credit? Debit. So this prepaid rent figure should go on the debit side here. So you can put like 1. So they give you a date column here. So, okay, well, actually, let me print this out for you, by the way. All right, so print current page. Right? Yeah. So, Kaylee, what you would do is you would just do a very brief recreation of what they've given you here. You don't have to draw every single line, right? Especially you're probably using like a folder page or you're writing in a book, so you probably have horizontal lines. But just draw a couple, well, at least the top line and the vertical in the middle to have your proper T, and head up your columns, right? So I will try to use the date column this time just to make sure it ties back to what we're seeing visually, right? Okay, let me just give this Zavi the printout. Right, so on 1st Jan 2015, we have prepaid rent. Rent is, in this case, an expense, right? Again, just to mention in passing, it is quite possible to have rent revenue if you are the one who has the property and are the landlord renting it out to some tenant. If that's the case, they will specify rent revenue. Here, rent is an expense, right? So at the start of the year, we have prepaid rent of 600. So again, a prepaid expense is classified as a current asset. Assets have debit balances at start. So what I want you to do for me is in this box here, you're going to put 2015, right? And then put 1 Jan, right? So write it now, right? So 2015, 1 Jan. And then in the details column, you could if you want, you could just put balance brought down, or you could put prepaid balance. And then you're going to put the 600 here for me. All right, so same thing for Kaylee, right? So that's what you're doing to Kaylee. All right, let me just zoom out a little bit to kind of capture the whole thing in the because I want to send a picture. Definitely not George, boy. Yeah, you could put prepaid balance brought down. You could just put balance brought down. You could put prepaid balance at start. Right, so you have 2015 kind of on the top there, 1 Jan, you have balance brought down or prepaid balance at start or what have you, and then you have your 600 here. All right. Yeah, no problems. Yeah, it could actually, you could open the print tray, the bottom tray there,
Okay.
and you could pull some pages, no problem. Like I said, we restock on paper, so we're cool. Yeah, no problems. Right. Now we have 2 items here. One on the 30th of June 2015, one on the 30th of November 2015, and they both say what? Rent paid. So these are both amounts paid in respect of rent during the course of 2015. Now, if you think back to your format, hold on, sorry, I mean, this is the G18. Right. If you think back to your format, what side is the amount paid? What is that's the cash book figure, right? What side is that on? That's right here, right? So what I want you to do is I want you to put both figures. So since you have 2 separate ones, put them separate, right? So in one line, you're gonna put 30th of June, right? Or June 30th. You're gonna put you could put rent paid, you could put cash/bank, you could put cash book, whatever you want to put, and then put the amount here, right? Now there are 2 amounts of 5,000, so again you could show them separately, right? If you opt to show them together to reduce the number of things you have to write, you could put a 31st of December, right? Date for it. But if they give you the dates for the separate payments, and there's only 2 of them, show them separately, all right? So you have a 30th June, all right? And again, it could say rent paid, it could say cash book, it could say cash/bank, and you put in a 5,000 here. And then right below that, you're going to put 30th November, November 30th, however you're writing it. Same thing, cash book, rent paid, cash/bank, and you put in 5,000 again, right? We okay with that so far? All right. Okay, Kaylee, you up to speed with it? Any questions so far? You're good?
So far, we're good.
All right. Now there's one more item here that I want to draw your attention to. That's very important, right? This, I'm sorry, one sec. Oh, sorry. Right, so this item I've boxed off in red. Rent expense is 12,000 per year. So they're telling you for the whole year, the rent figure is 12,000. That there is the income statement figure, or the rent incurred for the year. So if you go back to your format, right, the income statement figure or the amount incurred for the year is always put on the credit side of the expense account, right? The amount incurred in respect of an expense, the income statement figure, always goes on the credit side. So what I want you to do here, sorry, not this one. Yeah, what I want you to do here is I want you to put in on, now you don't have to put it at the top, you can put it wherever. So I would say put it at the top, right? So you put in 31st December, you put in income statement, and you put in 12,000. All right. Right, now, we have one entry on the credit side, which is the income statement figure, right? We have 3 entries on the debit side. One was the open and prepaid amount, and the next 2 were the amounts paid, right? So 12,000 figures, the amount incurred, that's the amount we have to pay to cover the rent in 2015. Now, if we look at the debit side, you have a 600 at start and then 2 5,000 figures. Well, if you add up the 2 5,000 figures, what do you get? 5,000 and 5,000 is 10. And then we have an extra 600 we paid last year. But tell me something, what is 10,000 plus 600? Not just 10,600? And look at the amount we actually had to pay, the amount incurred. That's 12,000, right? So it's 10,600 more than, less than, or equal to 12,000. It's less than. So you paid less than the amount incurred. You paid less than you were supposed to pay. So if you pay less than, do we now have a situation at end where there's a balance? Yeah, there's a balance. So here's my question. Is the balance going to be prepaid or accrued? Accrued, because it's still outstanding. Right. So what I want you to do, you're going to put, so wherever you put your income statement figure, if you put it on top, go right below, you can put 31st December again, and put balance, so you can put balance carried down, or you can put, sorry, no, my bad. It wouldn't be on this side. It would be on this side, because an accrued expense is classified as a current liability, which will be brought down on the credit side. But before you can be brought down on the credit side, at the start of the new period, you have to first be carried on from the debit side at the end of the previous period. So on this side across here, right, you will have a 31st December, and you can either put balance carried down or accrued balance at end, or accrued carried down. And what I want you to do is balance off the account. You'll have 12,000 as the total on the credit side, and I think 10,006 as the total on the debit side. So find the difference to get the balance, the amount accrued, and put it in for me. And then after you do that, make sure you total up both sides. They're both supposed to total the 12,000, and bring your balance down, of course, on the credit side. Right, Furious. Good afternoon, sir. Do you have a YouTube channel that can be? Yeah, I have a YouTube channel. It's the same name, Adaptuition. I have all the possible solutions from 2008 to 2023. I will be recording 2024, January and May in February, as well as the Jan 2025. So those will probably go up before March, so people will have those things for their mock exams, right? But yeah, and then there's also a ton of tutorials for multiple topics on the syllabus, more than 75% topics. The stuff that's missing is some of the early stuff like basic double entry, but there are enough past paper questions there on those topics to help, right? But you can always shoot me a message on Instagram or here on TikTok and find out. But yeah, these videos are there already. Okay, cool. So what I want to do is push that to the top. All right, this is Jan 2016. Yeah, okay, cool. Here in Miss Shreya. Right, cool. So let's label this J16. Okay, let's I'm gonna clear out this stuff here. Sorry. Hey Chantal, how are you doing? You reached late? That's alright, don't frighten. Hey Harry. Right, okay, sorry. So this is not insurance, right? It's rent? All right. Sorry, one sec. Oops. Rent, oops, my bad. Rent expense. Okay, so what we have, hold on, let's zoom in a little bit. Let's do 200 now. All right, that's a little more visible. Right, is this CSEC or Cape? It's CSEC, but you need to know it for Cape as well, because you never know what you have to do in Cape. You have to know everything for CSEC in Cape, plus more. Anyhow, yeah, so we have an opening prepaid expense. And a prepaid expense is classified as an asset. Assets have debit balances at the start. So we're going to put the balance brought down here. All right, 600. All right, so you can put balance brought down, you can put prepaid balance brought down, prepaid brought down. I like to keep it simple. Now, again, we have two figures in respect of rent paid. So you can put rent paid, I like to put cash book, right? Because that way I kind of know that, hey, if it's a cash book figure, it's a payment figure, right? So 5,000, right? So it's two amounts of 5,000. oh, I should really uncenter them, right? And I have the rent expense is 12,000 for the year, right? So the rent expense figure is the income statement figure, right? Or the rent incurred, right? So income statement and incurred both start with inc, right? That's 12,000. So right, so on this side you have the total value of all the payments made in respect of, sorry, one second, in respect of rent. Oh, well, okay, no, didn't mean to do that. Right. So you have you've paid 10,006, right? You prepaid 600 last year, and you pay our next 10,000 in total. So technically speaking, you've paid 10,006 towards 12,000. But is 10,006 equal to 12,000? Is it more or less than it? It's less than. So you still have some rent outstanding, which we know as an accrued expense. So that will be found by balancing the account, right? So balance carried down. So all we have to do is find the difference between 12,000 and 10,006. Which is 1,400, right? And then what you'll do, you'll bring the balance down. So balance brought down, 1,400. All right, okay, give me one second. Let me see, did I sent a picture of the question, did I not? Yeah, I did. Okay, cool. So now let's send a picture of the solution. Sorry, I don't know why that happened, but okay. Okay, Zavi, are you okay with what's on the screen currently? Any questions, problems, issues, or anything? No? All right. Kaylee, what about you? Are you okay with what's on the screen? Are you? All right. Any questions, anything at all? All right, cool. Lovely. Okay, cool. So we're going to put that one down and let's go again. All right, so that's the Jan 2016. Right, so there was also a revenue account. So again, next week we'll talk about revenue accounts, right? Okay, this is Jan 2015, right? So Jan 2015, right? So this is Quella True Life, right? An insurance agency earns commission. So don't worry about the commissions. The firm operates from a building which it rents from Citizens Realtors. So they rent in this building. So the rent is an expense, right? So Quella True Life's accountant, Mary Jane, reports the following information for the period ended 31st December 2014. So we're going to ignore all the commission stuff. So give me one sec. I'm actually going to just kind of blank out all the commission stuff, right? So we'll get rid of the border. We'll put a fill. Right, and then let me just... Sorry, I know I'm being real nitpicky here, unnecessary, but just humor me for now. Right, that's good there. And we'll do that. All right, cool. Okay, so we have some information for Quella, right? So we have a rent paid figure and a rent owing at the end of the year. Right? Now they didn't, so it says because it's for the period ended 31st December 2014. So they didn't say whether this was at start or at end. We could safely assume it's at end. All right? All right? Okay. So I'm going to send a picture of this in the chat. Come on, man. Could you focus? Oh, I forgot to leave it again. Right, Jan 2015. Okay, so what I'd like you to do, oh, I didn't print this out for you. Okay, cool, give me one sec. Current page. Okay, so they give you like just blank spaces. So you can just drop a simple T, right? So what I want you to do is head up a rent expense account, right? So the rent paid, that's the cash book figure, and the rent owing to landlord is, well, rent owing at end. If you have a rent owing figure, that's an accrued figure, right? And we know if it's accrued at end, right? So an accrued expense is a current liability. It'll be brought down on the credit side. But before you can bring it down on the credit side, it has to be carried down from the debit side. So both of these items will end up going on the debit side of the account. And what's missing is the income statement figure, the rent incurred, which will go on the credit side of the account. All right, so draw up your T account. Actually, hold on, let me see if I could. All right, put that one on the top. Put this one below. Right, so what you're going to want to do. So Jan 2015. Yeah, so again, what you're going to want to do, you're going to want to put in your rent paid and your rent owing carried down, and then to balance it off, you'll need your income statement figure. Hey, Kerry, thanks very much. Oh, Kerry, you're a subscriber? Okay, thanks. I'm assuming. Is your profile picture sideways? Oh. All right, so we're looking at Z, the sleeping one, Chantel, and Kerry. Thanks for the follow. Yeah, guys are almost at 5,000 on TikTok. Instagram real going down though. I was above 4,000, and then I started putting out, well, not content per se. Actually, I was doing like three to four stories every day, and then I was doing lives on Instagram, and people started to unfollow. Kerry, is this CSEC? Yeah, this is CSEC PoA. We're doing some what you call it? Expense account passive for questions. Right? So we did 2018, 2016, it's 2015. Right? We go until about 6, so we're hoping to clear off quite a bit of it. Right? Next week we're hoping to move on to some revenue account. We spent quite a bit of time on the expense account, so we have to move on from that. But I was trying to make sure I set a proper foundation so we could move a bit faster going forward. Well, thanks for following Kerry, Abby, Tiffany, Kemba. Hey, look, Dion. I thought Dion years ago. In fact, you know. Mark William boy. Yeah. 4992 boy. What? All right. What day is PoA? PoA, as in, so my 4 and 5 PoA days are Mondays and Wednesdays, 4 to 6, and the 4 and 4 PoA days, Tuesdays, 4 to 6. All right, so let's take a look. All right, so again, I'm not putting a date column just to save some time. If they give you dates, then you should probably use them. And I should probably show you how to use them, to be honest. Anyhow, so rent paid. So you can literally put rent paid, or you can put cash book, not XA book. Cash book, that's 46,650. And the rent owing to, so again, so rent owing is rent accrued, right? An accrued rent figure, an accrued expense is a liability, a current liability. And current liabilities have credit balances at start, right? Sorry, at end, brought down on the credit side of the account. But before you can be brought down on the credit side, you have to be carried down from the debit side, right? So this will be the balance carried down. So you could put balance carried down, or you could put accrued balance carried down. You could put accrued rent at end. Anything like that is perfectly fine. There's no one right phrasing you have to put, right? Now, there's no other information with respect to rent. So what we are missing and what needs to be in an expense account, once you're writing up an expense account, is the income statement figure or the amount incurred in respect of the expense, right? So the income statement figure, or you could put rent incurred, right? I like income statement, right? So income statement or rent incurred, right? Now all we have to do is balance off the account. Hold on. How? Oh no. Right. So no, this should be this figure here. Right. So all we have to do is put the 638. Right. And what we'll do, we'll put that in a kind of gray. Yeah. All right. Cool. And bring down the balance, right? So accrued rent at start of the following month or year, as the case may be. All right, cool. So what I want to do is I want to send this solution in the chart. Let's do that. Oh, I could take out some of those extra lines. Let's do that. All right, cool. Send that in the chat. Okay, cool. All right. Jin. Okay. All right. Keely, how are you feeling with that question? Everything okay with it? Any questions, anything, or you're good? All right, cool. Is that what about you? You okay with the John 2015 there? Yeah. All right, cool. All right, so let's put that down. Let's open this back up, close off the split, and go down. Right. So now we're getting into some of the older questions, right, where they didn't give you space on the paper itself to do the to put the solution, right? They would have given you a separate answer booklet in which you would have had to have done the work in, right? Okay. So what I'm gonna do is let me print out. Actually, hold on. Can I? How far can I zoom? Actually, that's enough. But what I'll do here, let me actually. Right. So let's line that up here. And we will resize it so it blocks off the commission stuff. Okay, cool. All right. So on examining the company's rent expense account, so forget commission. We'll come, like I said, we'll come back and redo the revenue accounts when we do those, right? So on examining the rent expense account for the year ending December 31st, 2009, the following details were revealed. So rent expense account. So accrued rent, December 31st, 2008, 2,500. Now, what they like to do, as we saw in one of I think the first question, was they would give us like a year-end figure for 2008 and then a year-end figure for 2009. And we had to know, look, we are doing stuff or we're doing the accounts for 2009. So if we have a balance at the end of 2008, this balance is understood as being the balance at the start of 2009. So this one here would be the... Hey, Nadine, thank you. Yeah, this would be the shameless person. Yeah, this would be the the balance brought down at the start of 2009. Okay, and we have rent paid by check. We have two amounts paid by check, which we saw in a previous question. And the first one was the first one. No, it was the second question. There were two amounts of 5,000 paid in respect of rent. So we know how to show that, right? Okay, what I think I might Yeah, I think I'll show a date column here because we have a 2008 2009 situation going on, right? So using the above information, prepare the following, right? So I'll put a line through that. Right here. Right, and I'll put a box around this item here. Okay, cool. Show the amount to be transferred to the income statement. All right, cool. So, check it. We have accrued rent at the end of 2008, which I said becomes accrued rent at the start of 2009. Now, it's an expense account. An accrued expense is classified as a what? Asset or liability? Liability. So, on what side of the rent expense account should the opening accrued balance be brought down on? The credit side. So, you'll put this on the credit side, right? Then the rent paid, the payment figures go on what side? The debit side. So you have two items to go on the debit side. Now, what does this say? Prepaid rent. So it switched from being an accrued amount to a prepaid amount at end. Now, a prepaid expense is classified as an asset. Assets have debit balances when they're brought down. But before you can be brought down on the debit side, you have to be carried on from the credit side. So this would be on the credit side, being shown as being carried down at end. And the missing figure is the one boxed off in the ready income statement figure. And of course, as we know, the income statement figure goes on the credit side. All right, so I want you all to try this T account for me, right? So again, the opening balance is an accrued figure. An accrued expense is a liability that goes on the credit side. Sorry, my shoulder gave me a little thing. Yeah, so that's going to be on the credit side. The two payment figures will go on the debit side. The closing prepayment will be shown as carried down from the credit side, And you have to leave room for the income statement figure on the credit side as well. And when you total up and balance off, the balancing figure will be the income statement figure. All right. So let me print this off for Zavi. Auto rotate. Yeah, okay. All right. Okay. All right. Fads does help me to be productive and sorry. Could you open? Thanks very much. Right. Current page. Current view? I could do current view? Wait, that real big boy. Alright, let me try something. Let's see if you can do it from here. If it's too much, then I could give you a fresh page. I know why it is on our way. Right. Mm. 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 Okay. Oh, cool. There you are. Okay, I think we finish at 2:45. If that's the case, then I could move them potentially, right? Because my class is 4 o'clock. Once I could cut them at 2:45, I could run back to Kevin at 3 o'clock, which is the same time as moving regularly. And then I could be back home in time for my son, right? Or alternatively, I could always ask the parents if what the children are doing. So either way, I think we covered. All right, and Simone also has her car. The only thing is that if she had picked them up and picked them up, it would be so okay. So she might be an option. But yeah, but I think we covered, right? So if you could go, let me know. If you need to go, let me know. Really, so I know for answer. But it shouldn't be a problem. All right. Yeah. Right. Huh? They don't have the listening. I used to have it always too. Oh, that's on the wrong side. All the pulling part, that's in the stock. Oh no. It's supposed to start from below. Right, but what I get what you're saying, but it's strange that's the problem. Alright. That's what to do here. Alright. Who's out there? Divya. Hey Divya, what's going on? Good afternoon. All right. Let's push that to the top there. Put this down. So this is the Jan 2008, right? Jan 2010, sorry, my bad. Oh, did I send a picture of that in the chat? That was the question. Did I send the picture? That was the question. I'm not bothering with you. You wasted my time. Right. Short boss boy, what's going on? Long time I see you. Right, so this is Jan 2010. So if you notice the trend, it was really in January they keep testing this, but they have not for a while. I know it's not why. Well, technically, I have my little theory. Right, and as you can see, they like to put rent. You know why? Okay, so we're gonna take out this piece here. Right, take out that, oh, all. Right, and we're gonna replace these as well. Okay, so the accrued rent at the end of 2008 becomes the balance at the start of 2009. This is good. Okay, glad to hear that. Hope you're learning and benefiting from it. Right, an accrued expense is a liability. Liabilities have balances brought down on the credit side. So we're gonna put that balance here. So balance brought down, sorry. Right. All right, so of course you can always put accrued rent at start or accrued rent brought down, right? It doesn't matter what you put once you put something that is accurate, all right? Okay, now we have two amounts paid in respect of rent, one on the 31st of May, one on the 30th of November. Now again, you should have a date column. I should put it in, but yeah, this is me being lazy. So we have the cash book figure of 6,000 and then cash book again of 9,500. Right, so we've paid a total of 15,005 in respect of rent, and we end up with a prepayment of 1,000. Right, now a prepaid expense is an asset. Assets will have debit balances when they are brought down. Before you could be brought down, you have to be carried down. So if it's going to be brought down on the debit side, it has to initially be carried down from the credit side. So prepaid rent at end, the amount is 1,000. Now, if we add up this side, we get the 15,005. We put that in that column. And then that should be the total here as well. As we could see, that is most certainly not the total. It's 3,005, right? Now, to find the amount that's missing, which is the income statement figure, right, or the rent incurred, all we have to do is find the difference between 15,500 and 3,500, right? That happens to be exactly equal to 12,000 by the way, right? So minus this, minus that, 12,000. So this is the amount of the income statement figure, sorry, or the rent incurred for the year. All right, and don't forget to bring a balance on. So prepaid rent at start. Right, so I know it says at end and then at start because at the end of one period is at the start of the next one. All right, and let me just get some lines going there. Okay, cool. So you're gonna maximize that again. And I'm gonna send a picture out in the chat. All right, but before I send that picture, Zav, are we okay with the solution there? All right, Kaylee, how are you feeling with what's on the screen currently? Any questions or you're good?
That's fine.
All right, lovely. All right, sorry, I thought okay, I did. I took a picture and it took a long time to recognize it. Yeah. Bring it on? No, because they only ask for the information for 2009. So you just show it at the start of 2009. All right? It's not out of the realm of possibility for you to have to show an account going from one year to the next. Right? But that's few and far between, if at all. Haven't seen one in a while, to be honest. Right, let me just take my little annotations here. That as well. Oh, right. Okay, so we're going again. This is 2009 May. All right, so I had to print out this whole page for Zavi. Current page. Wait, do I want to do this one, boy? Yeah. All right. Let me see what else I have going on here, boy. Oh, that's just halfway through. Wow. Oh no, I have a lot of blank pages here. Oh, now we have another triple on this side here. Okay, cool. All right. So let's see if we can get through those 6 accounts. Don't worry about that one, kind of far back. This one kind of far back too. Oh yeah, that one is a okay. Right. So yeah, cool. This is May 2009. All right. All right. Okay. Right. Okay. So what you're seeing on the screen, let me actually zoom in a little bit more. Do that, and then let's go to 200. All right. So we have here. So we have transactions. So we have wages paid by check, insurance paid by check, commissions received. Okay. So what we'll do, let me cross out all the commission stuff, right? No, not highlight. This one, line. So don't worry about commissions right now. Cool. All right. So again, raw commissions. Right. So we have wages paid by check, insurance paid by check, advertising paid by check, right? So what's the common theme there? Those are all payments. Those are all expenses being paid, or the payment amounts in respect of each of those expenses. Agreed? Okay. Now we have March 1st, 08, and then February 28th, 2009. Now March 1st, 08, and then February 28th, 2009. Those are actually so the March 1st is the start of the year, and the February 8th is the end of the year. So some financial years or reporting periods don't coincide with the calendar year of Jan 1st to December 31st. But they will have a 12-month period, and the start and end day will be like one day in front or one day behind. So like if you start on March 1st, 2008, the start of the next year will be March 1st, 2009. But the day before, which is February 28th, 2009, will be the end of that initial year. All right? So they have accrued wages, prepaid insurance, prepaid advertising. So these items here are the opening balances at March 1st, 08. And then February 28th, 2009, these are the closing balances. So accrued wages, prepaid insurance, and advertising owing. Now look at this. So the accrued wages, the wages was accrued at start and at end. The insurance was prepaid at start and at end. But the advertising started off prepaid and ended up accrued at end. All right? Okay, we're going to do one at a time. So what I want you to do first for me is the wages, right? So accrued wages. So wages is an expense. An accrued expense is classified as a liability. And on what side of the account is the liability balance brought down on? The credit side. And then, of course, the closing accrual will be carried down from the debit side, okay, before it's then again brought down on the credit side. All right, sorry, well, right shoulder, not feeling too happy. I'm not sure why, but okay. It was good all the time. Yeah, you're doing wages. So we're doing one account at a time. So we're doing the wages account first. We correct that. Then we'll do the insurance account. Correct that. And then we'll do the advertising. can do the wages account. Yep. All right. Cool. So this is May 2009. As a matter of fact. So 09. The first one was wages. Right. Okay. So what we're gonna do is we're gonna clear out everything here. And I'm gonna actually just copy and paste this a couple times because I have 2 more accounts to do after that, right? So we'll just take out where it says wages in these 2, right? Okay, cool. So let's go back here. We're gonna put this item to the top, put this item below. Right, so the wages balance. So accrued at start and at end. So accrued, again, an accrued expense is a current liability. Liabilities have balances brought down on the credit side. Right, so we're gonna put accrued wages at start, or you can just put balance brought down 2030. We're not far from that here. And then we have accrued wages at end. Now again, that's going to be brought down here in the next period. But before it can be brought down on the credit side, it has to be carried down from the debit side. Right? Or you could just put accrued wages carried down or balance carried down. That figure is 1990. Now, the other figure we have in respect of wages is the wages paid by check. So the payment figure, hey Paige, how you doing? I'm fine. How are you? How was your illness? Is it gone? Will you be joining us next week for some past papers? Right. So wages paid by check. Right. So that's the cash book figure. So you can put cash book or you can put wages paid. Right. So that's 12,530. You're good? You'll see me Monday? All right. Lovely. Lovely, lovely, lovely. All right. Cool. Right. So what's missing is the income statement figure. Oops. Sorry. Right. Right. So how do we find that? Well, simple. We total up both sides there. Clearly, we're missing a figure here, but we need that to fit the balance, right? So hold on. How we find that? We simply subtract, right? So we do the 14,520 minus the 2030. That's what, 12,490? Yeah. Okay. Cool. And then the balance brought down is in 1990, right? Or accrued wages at start. So. Okay, cool. Right. You're not ready for it? Well, that's okay. You don't have to be ready for them, Paige. The papers will help you to get ready. Right? So don't panic. Okay, cool. All right, so this is the first one, is wages. All right, Xavier, are we okay with the wages expense account? All right, Kaylee, what about you? Are you okay with the wages expense account? All right, cool. Okay, right, so that was wages. So now we're looking to do the the insurance, right? So it's prepaid. So remember, prepaid expense is classified as a current asset. Assets have debit balances at start. So the prepaid balance in the insurance will be brought down on the debit side, and then at the end will be carried down from the credit side. Right, so I'll give you a few minutes there. I think we should be able to finish off this, maybe just these next 2 accounts and then call it George. Ooh. All right. Ready for insurance? All right, cool. Put that at the top. Let's scroll down here. So we have insurance expense. Let's get the opening and closing balances, right? Whoa. Oh, we're up across there now. Okay. So again, an expense that's a prepaid expense. The prepaid amount is a current asset, right? That's brought down on the debit side. So prepaid insurance brought down would be 450, right? It's also prepaid at end. Now that'll be brought down here, but before you can be brought down here, you have to be carried down from the debit side. Credit. Sorry, I'm doing the wrong thing. This is the debit side here. Wow. Right. So let me start over. A prepaid expense is an asset. Assets have debit balances at start. It's also prepaid at end, which means it's going to be brought down here in the new period. But before it can be brought down on the debit side, it has to be carried on from the credit side. So prepaid insurance carried down, that is 310. Right, and the last thing we have with respect to insurance is the amount paid. That's going to go on the debit side no matter what, right? So that's the cash book figure or insurance paid. Right, that's 1420. Right, and what's missing is the income statement figure. Lovely. Right, so how do we get that? Well, we simply have to balance off the account. Right, so don't forget you can put this here. So prepaid insurance brought down, that's equal to 310. Right, we'll actually put these in a kind of gray since the lines don't show up that well sometimes. Okay, Mr. Minato boy. Right, so all we have to do is take the 1870 and subtract 310, that's 1560. Cool, okay. All right, and then we're going to take out a couple extra lines here. Lovely. Okay, Zavi, we okay with the insurance expense account? All right, Kaylee, what about you? You okay with that too?
Yeah, okay.
All right, lovely. All right, cool. Lovely. All right, and we have one more, which is the advertising. So remember, with the advertising, we started off as prepaid, but ended as accrued. All right. So I'll give you a couple of minutes, and then we'll correct that, and then call it a day. Oh. All right. So let's do this one and then call it a day. So advertising, expense. Okay, so this one again will be a little different because we started off with a prepaid balance and ending with an accrued balance. Now a prepaid expense is an asset. Assets have debit balances at start. So this is prepaid balance at start, right? That's 110. The accrued balance, so it says owing. Owing means accrued. The accrued balance is going to be is a liability, which has a credit balance when it's brought down. Before it can be brought down, it has to be carried down, right? So accrued balance at end, that is how much? 70. Now, the only other thing we have is the advertising paid by check, which is 450. That's this side, that's the cash book figure for advertising paid. Right, and we are missing the income statement figure. Oh. Which of course will just be the 630. And we'll print show the accrued balance brought down. 70. Take that out. Cool. Okay, Zabi, what do you think about that? You okay with that? All right, Katie, what about you? You okay with that item there? All right, lovely. Okay, so lady and gent, we're gonna call it a day there. All right, now before you run off, so past 4 weeks, including today, all of January, we were spent doing expense accounts, right? Now you've done the majority of the past paper questions on it. I always advise you to try them again on your own, right? There's actually one more like this with multiple items, right? So you could always try that as well and send me pics of your work, right? Oh. Are you looking for his pops, you sure? Oh, yeah. Yeah, no problems. You do your thing. Right, this was actually May 2008.
Bye.
How it went?
It was really good.
All right, cool.
Yeah, at first he's a little confused. I saw his test as well because he had a test on this.
Right.
What trips him up in his test was like labeling his axes. So he mixed up the
X and Y.
No, he mixed up the negative and positive. So
Oh,
he put the positive values below
Right.
the x-axis.
Oh, okay.
And like, so he flipped that around.
Alright,
So that's where he
interesting.
lost his marks. But other than that,
It was okay. All right, cool. Well, that's good to know.
Yes, sir.
Right. Okay, cool. All right. So, yeah, so Kaylee and Zabi. So next week we will be tackling revenue accounts. I'll give you some notes and stuff, but I think I want to try to wrap that up in maybe one session, to be honest. So I might actually start just like I was starting with the format. But I don't want to shortchange you with notes and things because it's important to have those things, right? So we'll see how it goes. But I definitely will not be taking 4 sessions on revenue accounts. Now, after revenue accounts, we will be proceeding with the rest of the adjustments being so after accruals and prepayments. Now, we didn't actually do the balance sheet and income statement extracts in the past couple of sessions, so we have to do that. But after that, we want to do the provision for bad debts or the allowance for doubtful debts, as it's now called. Then depreciation, which is also kind of a bit of a trouble topic. All right. Hey, Sarah. Oh, thanks for sharing. Good to see you. Yeah. And after that, we will round back to the income statement. So we will be very far ahead of where most people are in school, to be honest, right? So if you only need to backtrack, let me know in advance so I could figure out how to do it. Anyhow, that's about it for today. So if anybody has any questions, you didn't get to ask during class, or if anything crops up during the week accounts where you say you need help with, just message me, it's no problem. All right, okay. So Kaylee, I'll go on there. I'll see you next week. Bye.